Hello and welcome everybody, it's Stephen and I'm a popular investor on eToro. Thank you very much for tuning into my video today. As usual, if you could please like this video and subscribe to my channel, that would be really appreciated. So thanks for that. So today I'm going to be doing my usual video where I talk about what happened in the markets last week and also talk about how our portfolio fared last week. All in all, it was a very good week for our portfolio. We were up about 2.1% overall for the week, which was a very good result. And that compared with the NASDAQ, which was up about 1.2%, and the S&P 500, which was up about 1.8%. This showed some really good gains overall for our portfolio, which was really helped by the performance in a lot of our stocks. Did very well last week, as well as crypto, which also had a reasonably good week, although it was a little bit up and down in various stages, which I'll talk about a little bit later. Our portfolio is also doing really well for the month of October as well, which I'm really pleased about. And our portfolio is up over 11% for October. So that is a really good result. And our portfolio year to date is doing tremendously as well. Our portfolio is up nearly 139%. Now let's talk about the global market updates. And as if I start off in the US, as I mentioned, the S&P 500 and the NASDAQ both had really strong weeks. And a lot of this was to do with the positive sentiment that was in the market around the corporate earnings season. And there was quite a few good corporate earnings that were actually released last week, such as Chipotle as well as Tesla, which also had really good earning results. And this really helped to bring positive sentiment overall to the market. There's also been a lot of discussions around the social infrastructure bill over the last couple of months, as it's been presented by President Biden. And there's been a lot of discussions internally within the parties, as well as between the two parties, Democrats and Republicans, and a lot of discussions about what was going to be incorporated overall into that bill, and also what was going to be excluded. So discussions have been ongoing, and President Biden this week said that they were quite close to agreeing an overall social infrastructure bill, and it was most likely not to include increased corporate taxes, which had been a very contentious issue. There was also mixed data released from the US, and one piece of positive data was that the existing home sales had actually increased to the highest level since January, which shows that there's a lot of demand at the moment for property and the real estate sector. However, industrial production and manufacturing had actually decreased 1.3% since September, but a lot of this has been attributed to the recent hurricane that happened in the US, as well as some of those supply chain bottlenecks that I've been talking about over the last couple of weeks. And this is expected to improve over time. Data also showed that jobless claims were now at a pandemic low, which means more and more Americans are going out to work and participating in the economy. There was also a new regulation put in place to stop senior Federal Reserve employees from being able to buy individual stocks. They are allowed to buy mutual funds or other diversified baskets of stocks, but they are no longer allowed to pick individual stocks because of the conflict of interest and also the information that they are privy to over the general market, which I think is really good, because we really don't want Jerome Powell buying individual stocks and knowing how his actions can actually move those stocks. As we move over to Europe now, and it was also quite a good week overall for the major European indices. And there was some data released from the UK around inflation, which showed that inflation last month had gone down to 3.1%, which was down from about 3.2% on a year-on-year basis the previous month. So this shows that inflation has started to slow slightly from the previous month. However, there was an interview from the chief economist at the Bank of England, and his name is 𝘃𝗶𝗀𝗲, and he said that he expected inflation to go a lot higher, and he said over the next few months he wouldn't be surprised if inflation was standing at about 5%, which is obviously quite a long way to go, and also quite worrying that that comes from the chief economist at the Bank of England. So it's something that we need to watch over the next couple of months, and my own expectations is I do expect inflation to rise considerably over the next couple of months. There was also data released around the Eurozone business activity, which actually showed that for the third consecutive month, the PMI reading had decreased overall from Europe. So the PMI reading was at about 54.2, which was down from 56.3 the previous month. So this shows that those supply chain bottlenecks that I have been talking about, and also the energy shortage overall in Europe, had led to a reduced business activity PMI reading. However, if we compare that to the UK PMI reading, which was generally very positive and actually surpassed expectations, and that was at about 56.8, which shows that there's been a very strong bounce back after the COVID situation and those lockdowns in the service sector overall. As we move over to China now, and all eyes were on the GDP data that was released last week, and this actually showed that GDP had increased by 4.9% when compared to the previous year. However, this was actually disappointing, and it was actually below expectations, because as we know, 2020 was a year that was dominated by COVID-19. And it was actually expected that China would grow much stronger than it actually has done so far. But obviously a lot of this has to come down to some of the issues that they've been having in China. So obviously we had the Delta variant, which affected China, and they had more increased cases, which forced them to put in more restrictions around what's happening in China, which weighed heavily on the growth of the country. Also, you had the regulations around tech companies, which hampered some of their growth, and also the issues that we've been having in terms of real estate in China and those debt-ridden companies. And this all weighed quite heavily on the overall growth of China, and it hasn't grown as much as most analysts had expected it to previously. It'll be quite interesting to watch over the next couple of months as we started to have a bit of a bounce back in Chinese and Hong Kong stocks, whether this can continue and whether the economy can grow from strength to strength. But I think China is at the moment very heavily concentrating on the real estate market, and it seems that they have taken the pressure slightly off the internet-based companies. And we hope that over the next couple of months that these companies can go from strength to strength and have a very solid bounce back. And this has been shown by some of the stocks in our portfolio, such as JD.com, as well as Alibaba, which also have had a really solid month. Data also showed that house prices around China had stalled for the first time in 6 years. And as you know, there's been a lot of heat around the real estate market as of late, and actually house prices in China have actually been rocketing for over the last decade, as more and more speculators actually jump on board to try and flip as many properties as possible. And there had been a lot of things that the Chinese government had done over the last couple of months, like restricting banks on the amount of money that they could lend to speculators and the amount of deposit that they had to put up front. But there's also talk now from the president of China that they may implement a property tax, which would deter a lot of speculators from buying more properties with the sole hope of selling them for a higher price. So I think that the real estate market in China and the growth that we've had over the last decade may start to slow over the next couple of years. However, there was a bit of positivity around the real estate market last week as Evergrande, the debt-ridden Chinese property developer who owes a lot of money to a lot of different creditors, actually made a payment on a coupon for a bond that they had. And this actually provided a bit of positive sentiment overall in the market because it gave investors some hope that they were able to pay back some of the debts that they owed. The Chinese government also tried to soothe concerns around the energy shortage that they've had in China recently, which has had a fairly large effect on the manufacturing output in the country. And what the Chinese government said is they are going to try to guide the coal prices as much as they possibly can, because coal prices have actually increased over 170% from this time last year. So they are trying to get those coal prices down as much as possible and to alleviate some of those fears and some of those inflation issues that they're having overall in the country. As we move on to the top 3 performing stocks of last week, and in number 1 was 𝗃𝗶𝗃𝗀𝗃, which actually increased by 14.6% last week. And this was mainly caused by a really positive earnings results that was released. And this showed that 𝗃𝗃𝗃𝗀 actually had record revenue for a quarter that they've had in their history, which was really good overall for the stock. And they also showed that they had a very solid pipeline of new projects. The second best performing stock of last week was Group 1 Automotive, which grew over 10.2%. And this has grown really well over the last year or so, mainly because of the increased inflation numbers that are there in the economy, and also the shortage overall in semiconductor chips, which are used in cars, and a lot of those supply chain bottlenecks, which has caused a big surge in sales and increased costs of second-hand cars. So this has been very good overall for the stock. So as we move on to crypto now, and Bitcoin last week had a monumental and groundbreaking week as it surged past the all-time high at 67,000. And this was actually marked by 3 approvals of Bitcoin futures ETFs. And the first one that debuted last week on Thursday was the ProShares Bitcoin ETF. And this actually had a record amount of inflows of investment into it, and it actually stood at over $1 billion of AUM after just 2 days. This was then joined shortly on Friday by Valkyrie Bitcoin ETF, and the market did dip slightly on Friday on the debut of that ETF. Third best performing stock in our portfolio last week was a company called Innovative Industrial Properties Inc., which is also known as IIPR, and that actually increased by over 8.6% last week. And a lot of this has been put down to increased leverage in the system, as well as some manipulation of some of these futures types of Bitcoin ETFs, which I've talked about in previous videos. However, there is another Bitcoin ETF which has been approved as well from VanEck, and that is due to debut either on Monday or Tuesday this week. So I expect prices to be a bit volatile around this time next week, but overall I'm expecting that very strong Q4 that I've been talking about for quite a while, and I expect the Bitcoin price to continue to increase over the next couple of months. But I think it's going to be a little bit of a bumpy ride, so don't be surprised if there's a few pullbacks along the way. PayPal also saw a record amount of trading volume on Thursday as Bitcoin hit its all-time high. And this actually shows that there is more and more demand for people to buy Bitcoin and other cryptocurrencies at the moment, and this is a very bullish and positive sign. There was also some discussions this week from the Binance Smart Chain developers, and a lot of them have been talking about new initiatives in which they will burn more of the gas fees, a higher proportion of those, to make the BNB token more deflationary overall in nature. As we know, last week they also did the previously quarter BNB burn, in which they burnt about $640 million in equivalent of BNB. I also bought a small amount of Polkadot for our portfolio last week, and the reason why I did this is on the 11th of November, which is just in a few weeks time, something is happening called the Polkadot parachain auctions. And what this basically means is that protocols will be able to bid in an auction type format for the opportunity to have a parachain on Polkadot, which is really good overall for the native token because they are able to buy Polkadot tokens in order to be able to bid for the parachains. And also regular users can also pull these together in terms of the Polkadot auction. I also continue to trim some of our crypto positions last week in line with our strategy of trimming our crypto positions and our exposure the higher that crypto prices go, and also as the crypto cycle progresses. And last week, as Bitcoin hit its all-time high, I slightly trimmed our Bitcoin position, although I am extremely bullish on it for the next couple of months. And as I said, I expect it to go over $100,000 before the end of this year. However, I think it's important to have a margin of safety and to reduce our risks as we get further in the cycle overall. I also slightly trimmed our Ethereum position last week as it hit its all-time highs. And what I'm actually expecting for the next week or two is I'm expecting Bitcoin to kind of consolidate overall in this overall region. I think we're going to have a slight breakout of altcoins within the next couple of weeks before we then see Bitcoin try to make another break of all-time highs and finish that year really strongly, as I mentioned. And then I think that the altcoins again will have their time to shine. Thanks very much for listening to my video today. And as usual, if you have any questions, then please don't hesitate to leave them below and I'll be happy to answer them. And if you haven't joined yet, don't forget to join my Discord group, which we have a lovely community of people which we regularly talk about all things investing and other fun subjects. So I will leave a link below and please join that if you haven't done so already. And if you would like to recommend me to any of your friends or your family and they would like to copy me or they are interested in investing, then don't forget to recommend those. That will be really helpful for me overall. So thanks very much and have a great week ahead.